So they're talking about taking away your capital gains home exemption on your principal residence. So if you buy a personal home and the value grows, which pretty much everything has grown in the last 10, 20, 30, 40 years here in Ontario, if they were to wipe out the capital gains tax exemption, that would mean that if you buy your house for $500 and it's worth $1 million today, you'd have a $500,000 increase in capital gain. Now what they would do is take that capital gain, cut it in half, boom, $250,000. On that $250,000, you'd have to pay your annual income tax on that amount. So you'll take that amount, add it to your tax return for the year. Say you made 100, and now you add another 250,000 to that year because you sold it. That's when you took possession of your gain. Now, I'm not an accountant. You'll have to speak to an accountant exactly on how this all works, but that's generally the gist of it. You're gonna pay your tax rate on that money. It could end up being quite a bit. It could be 25%, could be 15%, could be 40%. Like, there's a lot of tax that you could be giving up on this money. So what do we think about that? As a homeowner and a real estate agent, I can see some of the positives and some of the negatives from this. Now the main negative would be for the people that have held their homes, have held them for a long time, and they want to sell their home, and then they'll have to pay capital gains tax on from when they purchased it to when they closed on it. Now the problem with this from a tax and legal standpoint would be any improvements you make to the property, you'd have to be able to deduct those. Mortgage interest you paid during that time, you would also have to be able to deduct that. There are different things and a lot of complications that could arise from this capital gains tax exemption being taken away. It's going to hurt people who have held their homes for a long time. It's going to make things very confusing for a lot of people when they're looking to sell. Make people hold their homes longer in some cases. People that are just like, oh, I don't want to deal with it. I don't want to sell. I don't want to have to deal with the tax implications. I'm happy with my house. I'll be content with it. I will hire people to come renovate my house. That's going to add a lot of work in the construction industry. Materials and prices on labor are going to boom even higher than they are currently. So that's a good for the construction industry, but it's bad for the consumer overall because no matter which way you go about it, it's more expensive to move, it's more expensive to build. So with that being said, home prices on new builds are either going to rise or builders are not going to be able to afford to build the homes and sell them for a profit, so they're just not going to build. So what's that going to cost? That's going to create more of a housing shortage as people are not moving and as builders are not building. So rents are going to skyrocket. The only people this really hurts are the older generation that's held for a long time, the new home buyer that wants to get into the market because there's going to be less inventory, so it's probably going to be more difficult to get in. And if there is more inventory and prices come down, then that's great. But rent is likely going to be higher. So with rent being higher, it's going to be harder to save for the down payment. So changing this one thing has a lot of implications that go all across the board. And the government, I think, if they even want to consider this, have to look into it, consider all the factors. I think that they need to look at the states and how they model theirs and have it that up to $500,000 if you're filing jointly on your tax return is exempt from capital gains tax. Anything beyond that amount, now you would have to pay capital gains on. The other thing is that there you can write off your mortgage interest throughout the year. So what's going to happen there is a lot of people are going to refinance their homes, have bigger mortgages, and just write off the interest. So if you can write off the interest, you can lower your taxable income throughout the year, and a lot of people are going to take advantage of that. So that is a positive, especially if you plan to stay in your home. Just keep remortgaging it and having extra money around and writing off your interest. So there are some positives like that, and then as well, if you're doing lots of renovations, you can use those to offset your taxes and blah 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 blah. I don't know exactly where I stand on this, if it's good or if it's bad, but overall I think that if it's something the government wants to do, they need to really look into it and make sure that they're making the right decision, because at the end of the day, I don't want to pay more tax, you don't want to pay more tax, but we want to kind of make sure that people can get into the housing market. I think that's very important, that once you're in, that you can also protect your equity. I don't think that where the market's at now, that the government should come in and try and slash the prices, because that's going to create harm to a lot of people that have bought into the market, especially at the higher prices that they are now. Now, I don't see prices coming down myself. I've said this in other videos, so you can go back and watch some of them. Anyways, I don't really know where I was going with that, so I'm probably just going to end the video here. And the news article will be in the description below, and I hope you have a great day. My name is Nakkila with iPro Realty and the Green Homes Real Estate team. Check out some of my other videos, smash that like button and that subscribe button. Have a blessed day.